Sorry about that, everybody. I just realized that the sound is just now working. I've got to use two computers for StreamYard, one to actually stream the trade station and the other to kind of monitor everything. But now you should be seeing, you should be able to hear me. So let me just kind of start over. It's really, really interesting when you get these kind of breakouts late in the day. And I try and take Al's advice when it comes to trading. Never be surprised by anything. No matter what you see, you can never be in denial. So at the end of the day, when you see a big rally like this and it's going up quickly, you never say to yourself, "Oh, there's no way this could happen." Anything can happen, no matter how big or how strong. The market likes to lull traders to sleep. And yesterday is a great example. You get a tight trading range. It's a very boring day. The bars are small. It's not that easy to take trades. The market's doing everything it can to make things relatively difficult. And because of that, this happens and it traps traders out of a trade. Traders get paralyzed. A lot of traders, they look at the tight trading range and they get used to trading range price action. And it's hard for them to transition or shift gears into trending behavior. So whenever I see a tight trading range, I never get surprised by a fast, strong bear breakout. Same thing over here. Big sell off, channel, lots of overlap, rally. We basically got a second leg trap. And whenever you get a second leg trap, you can see it tested the two low. Whenever I see two legs up in a trading range and then all of a sudden a big bear bar like 61, especially with follow through 62, if I'm long, I have to be out of the trade. It's also a parabolic wedge right here. There's the parabolic wedge. And trying to silence something. I apologize. So, anyways, we had a parabolic wedge and a strong reversal down. When you get a second leg trap, very common to test the bottom of the second leg, 56 here. And you can see we went below it, and then we immediately got a big bull bar. If I'm short at the bottom of the trading range and I see the market reverse up strongly, I am not going to stay short. I'm not going to be in denial. Same thing up here. If I'm long and I see a big bear bar selling off, I'm not going to be in denial. I might give it one more bar, but certainly after two bars closing on their lows, I'm going to throw up the white flag and exit the trade. The most important thing with trading is you cannot be in denial of what the market's doing. Big bull bar, strong follow through, trapping traders to the left, it's going to go higher. And it can go a lot higher. You have a fairly big range here. Never look at this and say, "Oh, yeah, there's no way we can go up here. And if we get to the open of the day, there's no way we're going to go far above it. Here's the open, this green line." Well, guess what? We went much further above the open. On a higher time frame, it's probably some kind of three pushes down, 1, 2, 3. Obviously, we tested the March 8th high, which I've said several times, this is an important price level. And the bulls are trying hard to keep the gap open. So if we go to the daily chart, we can see it right here. Green box, green box, green box. These are open gaps. Open gaps increase the probability that the market is going to continue to go higher. And until I start seeing gaps close, I'm going to assume that we're in a bull trend, and bull trends continue to make higher lows and higher highs. Right? What do I think is going to happen here? I think there's probably sellers up here, but I don't want to sell until the bears start making money. The bears did a good job selling here, but they could not close this gap. And there's a reason for that, because the bears are not strong enough in this case. By the way, I'm going to be switching this computer back to TradeStation 10. I fixed the issue I was having with TradeStation, and part of the issue was my OneDrive. For whatever reason, I moved the TradeStation files, the platform. I moved it to my hard drive of my computer, and I'm saving the workspaces of TradeStation in OneDrive. And on my other computer, if I save the workspaces and tell the tell the computer to download a copy on the hard drive so I can use it in offline mode. For whatever reason, TradeStation 10 works just fine. So if anyone's having an issue with that, if anyone's having issues with TradeStation 10 and you're using OneDrive, it's probably OneDrive not syncing properly. Yesterday, on the open today, we broke above the 10 high, reversed down with bar 1 and bar 2. I say that we tried to break above it here, and we failed. We got a big bear bar on right here, bar 5. Bar 5, strong enough bar, probably going to go a little bit higher. And then 6, follow through. Chances are it's always in short and good enough for a second leg. And then 7, obviously, very big bar, closing fairly far down. Are we always in short? Yes. Is this going to go for a measured move down? It might, but I suspect this is strong enough selling. I suspect we'll probably have to pull back first before we continue to go a lot lower. We've got the close of yesterday, big gap up, deep pullback. This is probably a big up, big down, big confusion trading range, most likely. Doji on bar 8, probably sellers above, buyers below, but I suspect we'll probably trigger the buy below 7. 9 broke below 7, broke below 8, reversed up. What about buying above 9? No way. I think there's sellers above 9, but the sellers may not come in until 50% down, 50% of the bar 7 body. And then 10, we reversed up, but a tail on 10. That's probably more of a sell the closed bar than a buy the closed bar. 11, bear bar, a little bit of a surprise, probably going to go at least a little bit lower. First up will fail. And then you see 12. 12 was disappointing for 11. A lot of traders, they sold down here. They'll scale in higher, try to get out break even. And you can't see it on 13. But if you go back on multi-charts or NinjaTrader, and if you go back on market replay and watch bar 13, 13 went up, pulled back below the open of the bar, and then closed on its high. So traders sold. They're able to scale in and get out near break even. Is it buy the close 13? No, it's a trading range. And if anything, I think 13 is more of a sell the close bar than a buy the close bar. It's a strong enough bar. We'll probably go at least a little bit higher, and that will limit the amount of traders selling it. 14, another bull bar, but a small bar 12, big bar 13, small bar 14. Looks like we're going to go sideways here. And then 15, outside down. For the bears, they saw it as a wedge. Spike, pause, second push, pause, third push that reversed down on 15. What about selling below 15? I would not. Probably buyers below 15. I do think we're going to go a little bit lower. We'll probably get to the 81 close. We might end up getting down to the 78 low. But right now, we're getting decent buying pressure, and that will limit the downside at least for the next couple of bars. 16, good follow through. But what do you notice? 16 overlaps a good bit of 15. And that will increase the probability that we pull back and start to go sideways. As good as 16 is, it's not breaking below a lot. It's overlapping all of these bars. In other words, the breakout of 16 breaking out below the tight trading range is really the 9 low to the 16 low. And that's not a lot of distance. And then look what happened on 17. The bulls who bought the 15 low scaled in on 16. They're making money with 17. 17 is a problem for the bulls. I think a lot of always in bears who were short, some would hold above 12, taking a chance that the market would go at least a little bit lower. I don't know if a lot of bulls, while I do think 17 is going to be a minor reversal up, I think a lot of traders will exit above 17. 18, pullback, test of 16, low 1, buyers below. And then we got a second leg up on 20. What about buying the close of 20? Nah, I'd rather wait to see the market close above the moving average or get something strong, like a big bull bar above the moving average, something like this right here, except closing far above the bars to the left. 21, a bear bar, and then 22, a doji. You see what's happening? Rally, pullback, rally, pullback, rally. It's a wedge, and that's why traders sold the close of 22. 23, bear bar closing on its low, wedge. Probably not going to go a lot lower, but you'll have some traders selling below 22, stop below 23, stop above 22, taking a chance it's a wedge and that we break to the downside. And you can see what happened on 24. 24 came neck close to the high close and turned down, tested the high of 21, went lower. By the way, when you get a low one like 18, usually you get trend resumption later, and you usually you get a pullback after 18. So it's a good buy below 18. And then you get trend resumption and a test of the 18 low at a minimum. So whenever I see a low one, I expect a deeper pullback into something more complex like a low two or low three. 24, bear bar closing on its low, overlapping a lot of 23. Not ideal, but probably going to go at least a little bit lower. And then 25, we have a doji. That's not ideal if you're a bear. If you're a bull, if you're a bear, that's really not ideal. Three pushes down, one, two, three. Increase the probability that there's buyers not far below. 24, bull bar. What about buying it? Well, you had a micro channel from 22 all the way down to 25. So there's probably more sellers above 25 than buyers. Plus, 26 is not really a great bar. There's a tail above the bar, and I suspect there's sellers above 25 scaling in higher. 27, bears made money selling the 25, scaling in higher, getting out break even. Tail on 26, tail on 27, probably more sellers up here than buyers. And then you can see 28, a bear bar, but after two consecutive bull bars and a 3-bar micro channel, now a 4-bar micro channel, probably buyers below scaling and lower. And 29, bear bar, probably going to go sideways. 30, broke to the downside, testing these lows, but getting a lot of overlap and bulls making money below every new low, probably buyers below 25. And then 31, reversed up again. We sold off, pulled back, sold off, pulled back here again, sold off again. This is probably going to evolve into a trading range, which means probably buyers not far below. 31, 32 consecutive bull bars, probably sideways. I think always in bulls. I think always in bears definitely get out above 31, certainly above 32. And then you can see low three, we had a low one on 33, testing near the low close of 30. So bears sold the close of 30 here, disappointed, getting out, break even. So they sell the close right here, 71.5. They get out at the low, 71.5. So bears are trapped. They sold the close of 30, scaling in, trying to get out, break even, and they couldn't. 34, I think I would certainly get out of shorts above 34. Too much risk that we rally and test the most recent major lower high, 27. And then 35, a bull bar breaking above the moving average with lots of buying pressure, probably always in long and going to go at least a little bit higher. 36, follow through, 3 consecutive bull bars. It's a breakout with follow through, breakout 35, follow through 36 above the moving average with a lot of buying pressure, possibly a variation of a higher low major trend reversal, bear trend, trend line break to a higher low. What are the chances that we get all the way back to the open? We might, but I think the first reversal up's probably going to be minor, which means whatever rally we'll get will probably have a deep pullback. 37, bull bar closing on its high. Good for the bulls. Probably going to go, probably going to get at least a small second leg up. But 37, it's a biclimax bar and it's a big bar. Look at the low of 37. So we have consecutive bull bars, pullback, big bar 35, outside bar 34, small bar 36, big bar 37. So it's basically parabolic, 1 push, 2 push, 3 pushes. And that will increase the probability that we start to go sideways up here. 38, bear bar, probably buyers below and at least a little bit higher. 39, tested near the highs. Bad high 1 above 38, so some sellers. But like I said, same thing with the low 1 down here. Trend reversal. We're probably going to pull back and then get trend resumption. Here, probably trigger the high 1, pull back, but still get trend resumption later on. And later on could be the next bar. 40, bull bar closing on its high, probably going to go a little bit higher, but a lot of overlap near the highs of this trading range, the start of the channel up here. This is probably more of a profit taking area than an area for traders to start establishing positions. Doji, probably going to pull back, and then we pull back 42. Outside down 43, but a trading range bar. Strong enough rally. I suspect buyers below scaling and lower. And then we see this really scary bear bar, 44 closing on its low. Is that the start of a double top with 10 and 43? I don't think so. 43 went pretty far. It went at least a couple of ticks above 10, and that reduces the probability of this being a successful double top. So as good as 44 is, it's the first reversal down after a fairly tight rally up to the 40 high right here. So probably buyers below or buyers 2 or 3 points below the 44 low. And that's what happened with 45. You can see 45 tested these breakout points here. It tested near the low of 35 and then reversed up. 45, Always in bears, what do the bears do? I think bears get out above 45. Too much risk, it's a higher low. And basically, you can call it a higher low major trend reversal. Bear trend, trend line break into a wedge that rallied, sold off, forming a higher low. For the bulls, it's swing by, but big bear bar 44. So we may go sideways rather than straight up. But certainly a problem for the bears who are selling the close of 44. I think a lot of those bears get out above 45. And then 46 trapped a lot of bears into a bad trade. Bears who sold above 45 or who were short above 45 got trapped on 46. A lot of those traders will buy and buy any pullback. And you can see we went sideways for several legs. The bears tried several times to get the reversal, and we ended up getting back to the 45 high and then reversing up on 57. I thought 45, 46, 47 was strong enough for a second leg. So leg one, pullback, leg two. And then 57, 58, probably buy the close, going to go at least a little bit higher. 59, still buy the close, but you're getting tails above the bars. And then 60, a bull bar. But remember what I said, rally, tail, rally, tail, rally, tail. When you get bull bars, bull bars, pullbacks, bull bars, outside down, those are wedges. Here, one, down. So down, up, down, up, down, up. That's a series. This is what this looks like on a smaller time frame. In other words, these overlapping bars with tails will look like this on a small enough time frame. And if we go here to 1330, that is the variation of the wedge. 1, 2, 3. So if you're long up here, that's the danger. And you can see what happened. The bears got a strong reversal down. Always in traders get out below 61, and bears they can start selling. And then here, consecutive bear bars strong enough for a second leg, probably going to fall below 56, which we did here. It's really common whenever you get a strong rally and it gets a deep pullback, you often get a retest around 50%, like 67, 68. For the bulls trying to get out break even, bulls buy the close of 60, they buy more lower, try to get out break even. That's what leads to a second leg down. But look at the tail, 69, 70. That is a warning that this is not ideal and this might be a trap, trapping traders into a bad trade. And then we got a big bull bar, flipping the market back to always in long, and we broke strongly to the upside. So you can buy above 71, buy above 72. And there's really no reason to get out until the end of the day. Let me talk about always in. I've got to wrap this up here in just a minute or two. Always in traders, they sell below 5, and where do they get out? Some will get out above 12 and then sell below 15. Not really ideal. But if they do get out above 12 and they sell below 15, I think they get out above 17 here. And then if you get out above 17, bulls they can buy, but they get out below 23. Bears, if they sell, where do they get out? They probably get out a couple of points above 25. And then it just becomes really, really difficult. If you sell below 28 or 29, you have a chance you might get trapped. 3 pushes down, 1, 2, 3. So the rally to 27 might get a second leg up. But if you do sell, I think bears get out above 31, certainly 34, and bulls start buying above 34 or 35. And then where do the bulls get out? I think they probably get out below 42. It's a trading range, and their stop's pretty far away, so better to buy a pullback. Aggressive bears can sell, but if they do, they get out above 45. Bulls, they buy above 45, buy above 46, but you're buying high in a trading range, which means if you start to go sideways, you can get out quickly and then look to buy again on the pullback, or you have to hang out and hold through the pullback. Bulls, they can buy above 57, 58, anywhere, but they get out below 61 or 62. Aggressive bears start selling. And then where do they get out? They probably get out a couple of points above 70. 3 pushes down, test of the second leg, 56, the second leg trap, which is the minimum expectation. And then bears, they certainly have to be out of shorts by bar 71. Bulls start buying and they hold into the close. Okay, I'll answer this one question and then I've got to wrap this up. So, question: I need help studying Mr. Brooks. So, Al's While studying Al, this individual is taking all the setups taught by him, resulting in overtrading. Please share your guidance on how to stop overtrading. Yeah, learn how to swing trade. So basically, how do you stop overtrading? Yeah, learn how to swing trade. Matt, learn always in. I'm going to talk a lot about that in the future. Always in trading is key because if you can learn how to trade always in, it's going to keep you on the right side of the market. So learn what I just talked about. To sell below 5, you get out here, and then maybe you sell again here. Otherwise, you stay flat. You buy above 34, you get out below 42, you buy above 45, maybe stop below, and then you hold all the way to 61. Bulls have to get out below 61. They start selling. Bears start selling, but then they have to get out above 71 here, and there's no reason to exit. Everything in between is more minor, but you have to learn how to swing trade. If you want to be a good scalper, you have to learn swing trading. Okay, so overall, good day for the Bulls. Strong bull bar, probably going to go at least a little bit higher. I suspect we'll probably test back to the all-time high. This is pretty good. This is strong. The market, if you think about what happened, we sold off here. The market gapped up quite a bit and then rallied even further. So it's trapping bulls. It'll be interesting to see what tomorrow looks like. Will tomorrow be another strong bull bar? So I wouldn't be surprised if tomorrow triggers the buy above and closes as another strong bull bar. Small pullback trend. And here, this rally that we had last week, which was the rally on the 19th and 20th, that's strong enough for a second leg up. So we'll see. All right. Thanks everyone for watching, and I will talk to everybody soon.